A very good evening, everyone, and thank you for joining Infosys' fourth quarter financial results. My name is Rishi, and on behalf of Infosys, I am delighted to welcome all of you at our campus today. All participants at this press conference are fully vaccinated and adhering to COVID-19 protocols. With that, let me invite our Chief Executive Officer, Mr. Salil Parekh, for his opening remarks. Over to you, Salil.
Thanks, Rishi. Good afternoon, good evening. Welcome to the campus after a long time. Good to see all of you here and good to see all the energy in the room. We've had an exceptional year this year with an annual growth of 19.7% in constant currency terms. This was the fastest growth that we've had in 11 years. We are gaining market share, we are building on our leadership in cloud and digital, and we are working more closely with clients on their transformation programs. Growth was broad-based across business segments, service lines, and geographies. Each of our business segments grew in the double digits. US and Europe grew 20%. So very strong performance all around. Our digital revenues now account for 59.2% of our company, and they grew at 41.2% for the year. Within digital, our cloud work is growing faster, and our Cobalt cloud capabilities are seeing significant traction with our clients. Our growth has been accompanied by a robust operating margins at 23%. We delivered these margins while maintaining focus on our employees with increased compensation and benefits. Our large deal wins were at 9.5 billion for the full year and 2.3 billion for the quarter. In Q4, our revenue growth was 20.6% year on year and 1.2% quarter on quarter in constant currency terms. Our industry-leading performance in FY22 would not have been possible without the enormous contribution and commitment of all of our employees. I'm extremely proud and grateful for their extraordinary efforts in delivering all the work for our clients. We recruited 85,000 college graduates in this financial year. We added 22,000 employees in the fourth quarter. We have an extremely strong recruitment program. This is really a reflection of our enhanced recruitment capabilities, solid brand, and deep penetration into various talent markets. This increases our comfort to support our clients in their digital transformation programs as we look ahead. Our sustained momentum in FY22, large deal wins, robust deal pipeline, and client confidence in our capabilities give us comfort to provide a guidance of 13 to 15% for growth in financial year 23 in constant currency terms. With the pace of digital disruption accelerating across industries, we see a robust demand environment and immense potential to partner with our clients. Our One Infosys approach is serving us well to bring the best of Infosys in the service of our clients' needs. Our strategy that we launched 4 years ago has really served us well. We've delivered industry-leading growth and industry-leading TSR. Now, as we look ahead to the next phase, we want to further enhance our leadership along the digital innovation curve. We plan to expand our capabilities by scaling our cloud capabilities even further, expanding our digital work, expanding on our automation, increase relevance with large enterprises and the technology native companies, and strengthen our employee value proposition. Our focus on staying ahead in the cloud and digital ecosystem and the focus on employees and some of the costs which are coming back after the COVID phase is behind us, result in our operating margin guidance to be at 21 to 23% for financial year 23. With that, let me pause and open it up for questions.
Thank you, Salil. We will now open the floor for questions. Joining Salil is Mr. Nilanjan Roy, Chief Financial Officer, Infosys. As always, ladies and gentlemen, we request you to ask only one question each to accommodate everyone over the next hour. And with that, I'm going to ask the first question from Reema Tendulkar from CNBC TV 18. Reema has sent her questions to us. One question for Salil and one for Nilanjan. Salil, you started FY22 with a guidance of 12 to 14% and finally ended with a 19.7% growth for FY23. This year, again, you're starting with a guidance of 13 to 15%. Is there conservatism built into it? And the macro environment is far more uncertain now. Economists are bringing down their GDP forecasts. Do you see any impact on technology budgets as your clients face a squeeze? And for Nilanjan, what led to the sharp 200 BPS margin decline in Q4? Your guidance in 21 to 23% is also lower than the 23% that you closed FY22 with. What is the reason and what about pricing? Do you see pricing being key in margin levers?
Thanks, Rishi. I think the first question, let me start off with that. We see the demand environment to be robust today. Yes, the macro environment, there's a lot of talk going on, but in our pipeline and in the work that we're doing in digital and cloud, we see a clear demand with our client base. Based on what we've had in terms of large deals, 9.5 billion in FY22, 2.3 billion in the fourth quarter, 40% of our large deals being net new, 48% in the fourth quarter. And what we are seeing in our pipeline going ahead gives us good confidence that this is the guidance in which we start the year at 13 to 15%. As the year progresses, we'll see what the various forces are that will play into all of this. We've also had 22,000 net additions in terms of employees, and that supports our view that we see a good, strong outlook in this current financial year 23.
Yeah, so on the margin question first, on the quarter, I think we were clear at the beginning of the year. We gave a margin guidance band of 22 to 24, and we've ended up smack in the middle at 23.0. So what we've achieved this quarter, a part of it has been planned as well. So for instance, in this quarter, for utilization, which is a big driver of margins, has come down. That was planned. We were sitting at 87.5, uncomfortably high for us, and we brought that down 88.5 to 87 actually in this quarter. So that's one planned intervention we've done. We knew that margins would get impacted. Some of it is seasonality of quarter four. That is because the working and calendar days are lower from the previous quarter. That also impacts margin. And some of that has been some headwinds on the revenue side. We've taken a specific commercial contractual for a client provision, which we expect to recover in the times ahead. But overall, I think we've added 22,000 people in this quarter as well, as Salil said. And this is looking ahead for the demand environment, and some of that cost pressure of cost tails in the quarter ahead. But like I said, we're very, very comfortable where we are for the year at 23. Looking ahead 21 to 23, we have seen what we want to do, as Salil talked about. This demand environment is very, very robust, making upfront investments behind talent, both in terms of getting freshers in early in advance, also looking at where we can invest ahead at the points which Salil talked about. So I think we've seen the success of that in 2019 when we made these investments, and the last 4 years have been a tribute to that of the market share gain as well. So that is one part of the margins, and of course the second part is travel will come back. We've seen that already, some of the facilities costs as people come back to work. Those were the tailwinds due to COVID on the margin side, and some of that will return to norm. And therefore, 21 to 23 is a comfortable band which we think we can operate in, and builds in both of these impacts as well.
Thank you. I'm going to move to the questions to our journalist friends who are present here, and then return to some of the questions we've received from broadcast media on text. So I'm going to go to the Economic Times. Sai Ishwar joins us in person. Sai, why don't you ask your question?
Hi, sir. So Could you tell us, like, recently in a brokerage event, you said your platforms and products and platforms business is doing well. So could you give us some color on what's happening there? Also, could you give us like overall percentage of what percentage of your revenue is from the platform business? And also talking about this recent influx of GCCs in India from global MNCs. So have you entered into any partnerships recently? And do you see that also aiding revenue or expanding your partnerships with global companies? Yeah, thanks.
Thanks for that question. I think on the platforms and products. So first, we have a very strong business, as you know, in Finacle, in the banking sector. It's a completely digital core banking product today, and we see continued traction in the growth that we are seeing there. We don't break that out individually, but we see good traction with that business. We are also putting together other platforms. For example, we have a platform called Equinox. This platform is focused on e-commerce, on retail companies. We had a very large deal win in Q4, which is built on the Equinox platform. And we are starting to see traction across multiple of these areas that we've put in place. We've also had a platform on insurance with McCamish, which is working well. We don't disclose the platform and product revenue breakup, but we are comfortable with how we are seeing the growth and the traction in that at this stage. And the global companies with the centers here. So we have very strong partnerships with the global companies that have centers in India. And we see a life cycle with them at the early stages. So if you look back 5-10 years and as you look ahead, at the early stages, there's a strong interest in partnering as the scaling up. In the middle stages to make sure there's more efficiency, and in the later stages to see if we can take those over and transform them. And we are working with clients in all these different stages. We are in conversations, in actual work with clients where they're building out a new capability. We are in discussions with clients where they're looking to see if that's something we can take over and transform completely, and all of that in between. Those are very important locations for the global clients. These are places from where the leadership of these centers in India are making global decisions for the companies. And we are quite fortunate that we are partnering with many of them.
Thank you. The next question is from Ayushman Barua from the Mint.
Hi, Salil, here. Hi. Firstly, what has been the impact on business from the Russia-Ukraine war, right? That's one. And point number two is you have recently launched the Infosys metaverse foundry, right? So what has been the initial traction? Have you managed to win any contracts or deals with regards to this? Thank you.
So first, with respect to the situation in Europe, Infosys as a company very much would like to see that the two sides come together and come to some agreement on peace. We've also launched a fund for $1 million to help on the humanitarian areas. Given what is going on in the region, we have started to transition all of our work from our centers in Russia, from in Russia to our centers outside Russia. We have less than 100 employees in Russia. We work with no Russian clients, and the work we do is with a small number of global clients in Russia, for which, as I just mentioned, we've started the transition. So at this stage, we have no impact within our business, given what is going on from an Infosys perspective. Once again, we are very much concerned with what is going on the ground, and we are doing everything we can to help. We're also providing some assistance for reskilling of individuals that are displaced, and seeing as they move to other geographies, if they can work in some of our locations in Eastern Europe.
Are you clear that you do business with Russian clients?
Yeah, so we don't do any business with Russian clients today. and we have no plans of doing any business going ahead. The metaverse has been an incredible launch. I'm glad you mentioned it. So we have created an ecosystem, a metaverse foundry, which was launched a few days ago. We are already in active discussions with several clients to start to see how they can use it. There are examples, whether on AR, VR, there are examples that we are already using. For example, the work we do in supporting ATP. There's active work in the manufacturing segment because there's a lot of use within the metaverse of what is going on in supporting, whether it's training, whether it's security, whether it's safety procedures. So a lot of discussions. We are excited about it and our clients are excited about it.
Thank you. The next question is from Chandra Ranganathan from Money Control.
Hey, Salil, Nilanjan. I have questions for both of you, so, please bear with me. Salil, the Q4 numbers, I think Rima covered it, but, it's still below what the street was estimating. So are these one-off factors? Because Q1, you typically have a strong start to the year. So are these one-off factors? Will you sort of regain momentum? Because you don't have the mega deals that you had that, cushioned you in a previous fiscal. I also wanted to ask you about, the whole controversy. First of all, the whole controversy around Russia. You recently closed your presence there. There are also questions about Akshata Murthy's stake in Infosys. Well, I know, you have nothing to do with it. Are these discussions happening at the board level? Are clients asking you about it? Because North America and Europe is, where you get a majority of your business. So how serious are those concerns? Questions for Nilanjan. Attrition has zoomed to 27.7%. TCS is still at 17%. So do you see this getting worse in the coming quarters before it gets better? What are you doing to rein in attrition? And if you can give us numbers in terms of the number of freshers hired in the previous fiscal and your fresher hiring target for this fiscal, if you can, break that down for us. Thank you.
Thanks, Chandra. I think on the first one, we had very strong volume growth in Q4. As you mentioned, this is a one-off, as Nilanjan was sharing with a client, which relates to a contract situation. We fully expect that this will be reversed in the coming quarters. We see very good momentum into our business as we look ahead. Our view is, with the guidance we've given 13 to 15% growth, and the fact that we have a significant new number of recruits in Q4 22,000, we have clear understanding that we are in a good place and the growth there is working well. With respect to the discussions in the UK, we have no comments to make on any individual shareholders. Our approach on Russia, I just outlined, we are transitioning our work from Russia and we have a real concern for what is going on the ground, and we are providing humanitarian support and help on that.
Decision to cease operations in Russia came on the back of that controversy. That's why I'm asking you. Since she's part of the promoter family, is this a concern? Has it been taken up at the board level?
So there again, I have no comments to offer on any individual shareholder with the company. Our approach has been driven essentially by what we see, the work that we are doing in that location, how we have to manage the delivery of that work, and what are the implications to our employees that are in that location. Those were mainly the factors that we looked at, and that was a discussion that we had within the management and the leadership team.
Yeah, just to add to Salil's point, I think in Q4, if you see our year-on-year, we ending the year at 20.6. The full year is 19.7. It's very important not to get fixated just on the quarter. So our exit velocity is very high. The volumes are very good for the quarter. There is some seasonality on the revenue line as well, which I talked about. But I think overall, that's giving us the guidance. I think 13 to 15. I don't recall in the last 10 years if we've given such a guidance, Salil. So I think that's something as well. Your questions were on attrition as well, and the fresher hiring. So in the last year, we've hired 85,000 freshers across both globally and in India. And the year before, I think that was the pandemic year. I don't think there was many hires, maybe a few thousands. And we are planning to do upwards of 50,000 at least. And we will see how that plays out. But that's just initial. And the good news is we have these two bright gentlemen who have mastered the art of off-campus recruitment. Earlier, the engine used to just be go to the campus, and we used to actually not have any flexibility in our volumes. I think today we have that flexibility to ramp up volumes anytime, and I think this year, I mean, we had no idea that we would be able to service a 20% demand, right, with a limited fresher set. So that's working very well. Attrition is 27.7 on a LTM basis, which is last 12 months. Actually, attrition for the quarter has come down by close to 5%, both in percentage and in absolute headcount. So we talked in last quarter, attrition had actually stabilized. And in this quarter, we are seeing both as a percentage for the quarter. Of course, the tail effect being, you're seeing it on an annual basis, will continue to climb. But the good news is we've seen some of the stability. And hopefully with the interventions we are looking ahead, and with the 1st April comp hike planned, we should continue to see some improvement in that.
Thank you. Swati, if there's time later. The next question. Later, Chandra, if we'll have to come back to you. There are a lot of people, sorry. The next question is from Reuters News, N. Sethuraman.
Sir, could you please be more specific about like what exactly was the business in Russia and like what exactly are you moving out? And you said like there's no impact on ops. So if there was no impact on ops, like what was the work earlier being done in Russia? And what is the impact of Finacle? Because like you had been working with some clients for Finacle in Russia. Alpha Bank was part of it, right? Like there was a blockchain environment that was created a couple of years back and it was tested. And what's the update on that? And you said that like there's no plan to work with like clients going forward in Russia. So which means that like so there are a lot of major banks there like under sanctions. So what would be the impact of your financial services and banks business if you are moving out of the region? And like because it's all interlinked, right? Like in Europe, could you be more specific about like those ops that you're moving out? And could you please also help me out like like how many resources were there in place in Russia, and like what exactly is a plan for them? Is there any sale you are considering for the Russia ops? I think it's not a subsidiary, 100% subsidiary for you.
So thanks for the question. I think the work we do is for a few of our global clients that have operations in Russia. We have less than 100 employees in Russia. Working with our clients, we are in the process, we've initiated how we can transition some of that work, all of that work outside of Russia. We have no work with any Russian client today, and we have no plans for any work with any Russian client going ahead. So we have no work with any Russian client today, and no plans for any work going ahead. Finacle, of course, works with companies, but not in Russia. So they work with banks all over the world. But that market was not a market that we were servicing in the past as well. So we have no active clients in Russia and no plans for any more clients there. There are less than 100 employees. There are less than 100.
I think probably less than what there's in this room.
Thank you. The next question is from Rishabh Shaw from Deccan Herald.
Hi, gentlemen. So my question is, have you gained market share from some of your bigger rivals? And so you spoke about attrition is enough has been spoken, but are we, is the worst behind us? And the third question is, okay, so you spoke about Russia. So in Eastern Europe, what's your presence?
So on market share, we are clearly gaining market share in our view. At 19.7%, from what we understand, we are one of the fastest growing All of this growth was based on an organic basis, and we see the tremendous traction we have with clients that gives us an increase in the market share. On attrition, as Nilanjan shared, in the quarter, the attrition was about 5 points lower than in the previous quarter. And everything we see gives us a view that attrition is coming more and more into the range that we would become comfortable with. We will see how that progresses. We are actively working on many of the initiatives that are helping on this.
Thank you. The next question is from Uma Kannan from the New Indian Express.
Congrats on a strong execution in the quarter, and it's fantastic to see you all in person here. Yeah, my question is, considering the present geopolitical risks, since you have presence in Eastern Europe, are you planning to increase local talent there? Since you were talking about skilling there, so are you planning to increase there? And my next question is on workforce. Are you facing any challenges in terms of A, retaining employees, and B, bringing them back to base locations? Thank you.
So in Eastern Europe, putting aside the geopolitical point that you mentioned, I think we have a plan of expanding in Eastern Europe. We have strong locations in multiple geographies. We are growing all of those locations. We had an approach, as you know, over the last few years for localization. And in that light, we've already expanded quite significantly, whether it's Poland or Romania. And we will continue to expand in the Eastern European geography. We have the work that is done there is really strong, and we believe that will continue to expand. The second one was?
Challenges in terms of retaining employees and bringing back employees to base locations.
There, as we were both mentioning, our approach to attrition, our approach to employee engagement, we're making huge changes there, and we're seeing increased numbers internally on what we track with employee engagement, employee connect. What we've done as a company through the COVID period has really resonated with our employees in the flexibility that we provided and the support and the care, complete support around any medical issues, the vaccination program that we ran, among other things, for our employees. Now, in terms of the base location, our approach to return to work has been to work keeping in mind what our clients are looking for and keeping in mind what our employees are comfortable with. We are slowly moving work back onto campus. We understand that some of our employees are, of course, not in the primary location. And today, the work from home is working extremely well. So what we build as we go through the next several months and quarters will be with that flexibility. There's a tremendous advantage to the employees with the flexibility, and we will keep in mind what our clients are looking for. There are certain requirements within some clients and some industries which will require some of those teams to come back sooner. And then over time, with this massive recruitment from colleges, we also want to be aware and responsive to how we build a culture within the company going ahead and rebuild our social capital. But all of those will be done in keeping the best interests of our clients, employees, and the company in mind.
Thank you. Salil, Nilanjan, I'm going to read out some questions we've got from some of our media friends who haven't been able to join us physically. We have about 5 or 6 journalists who sent questions. The first in the order is from ET Now.